Happy New Year from Cushman Wakefield Vietnam. The Vietnam economic picture as at the end of 2013 can be described as stable. Macroeconomic stability has been underpinned by moderate inflation and sustained, if not spectacular, GDP growth. Headline CPI inflation has followed a downward trend from its peak of 22% in September 2011 to stand at a very manageable 6.6% as of the end of 2013. This is aided by subdued credit growth and has also eased the pressure of the Vietnamese dong, with the USD-VND exchange rate hovering at just over 21,000 dong. Foreign direct investment has reached US $21.6 billion in 2013, which is a 54% increase year on year and is expected to increase in 2014. The conclusion is that the economy is positioned in a better place than it was 1 year ago. Hanoi witnessed no new supply coming online in Q4 2013, meaning the total space for Grade A remained at approximately 330,000 square metres, and Grade B space at roughly 589,000 square metres. Rents in Hanoi were slightly down on the previous quarter, but occupancy remained stable. There is nearly 200,000 square metres of space forecast to come online in the short term in Hanoi, which will cause rents to reduce unless demand picks up. New buildings include PVI Tower, EVN Towers, the Apex Towers, Handico Tower and Lotte Centre. In Saigon, no new office buildings entered the market in Q4 2013. Rents in Saigon for Grade A space were stable, with only a slight decrease in Grade B space recorded. Occupancy of both grades increased by nearly 2% quarter on quarter. Net absorption was recorded at 11,000 square metres, which is an encouraging sign. In Ho Chi Minh, total net absorption for A and B grade buildings for the whole of 2013 was over 100,000 square metres, which is higher than the two previous years. This accelerated take-up rate, combined with the slowing down of new supply, suggests rents should stabilise or even increase in the short to medium term. Grade A occupancy is at 90% when 2013's newcomers, Times Square and Lim Tower, are taken out of the calculations, suggesting that the mature Grade A buildings are maintaining a high and stabilised occupancy, and in some instances rents have increased. CBD locations will continue to be of interest to tenants as rent levels are at historically low levels and are expected to increase in the medium term. Approximately 100,000 square metres of Grade A and B space is expected to be finished in 2014, which we expect to be absorbed by the market without any significant impact on rental levels. Hanoi witnessed the opening of Times City just before Christmas, providing over 200,000 square metres of floor space to the market, pushing total retail space in Hanoi up to nearly 1 million square metres. The past quarter continued to witness the trend in Hanoi of developers charging rents to tenants on a percentage of turnovers, as opposed to fixed rents, in order to increase occupancy. Significant projects under construction in Hanoi include Chomo Plaza in Hai Ba Trung, the Lotte Centre in Ba Dinh, all of which are expected online in 2014. The Aeon Mall should come online in 2015. In Ho Chi Minh City, the Park Center Canterville opened, as well as the Lucky Plaza and Tien Son Plaza, adding approximately 32,000 square metres of space to take the total amount of space in Ho Chi Minh City to 820,000 square metres. The Saigon CBD retail market continued to perform well, with occupancy standing at 89% and rents keeping the same as last quarter. However, rents and occupancy in secondary and suburban locations continue to fall. The retail sector in 2013 witnessed the introduction of some big brands in Vietnam, such as Starbucks. McDonald's is set to arrive in early 2014. This trend of big Western as well as other Asian brands is set to continue and will accelerate in 2015 as the rules on limiting foreign brands is lifted. The retail sector in Vietnam continues to modernise as the predominantly young population become richer and shopping habits change, with the traditional markets becoming less popular and the new high streets and shopping malls rising in importance. With the recent changes in developers' policies, such as offering flexible payment terms, handing over apartments before getting payments from clients, offering discounts, free services and management fees, or directly cutting prices, the market witnessed a better performance in Hanoi in Q4 2013. Hoan Tower, a Grade A project, performed well this quarter thanks to its prime location and completion status. Grade B and Grade C stock continued to sell well, with roughly 23% of Grade B stock sold this quarter and 24% of Grade C stock sold. However, only 6% of Grade A stock was sold. In Ho Chi Minh City, Grade C apartments continued to sell well, with 83% of all units absorbed this quarter being that stock. Only 12% were Grade B and only 5% were Grade A. Rents of all grades continued their downward trend, with significant decreases of 10% year on year for Grade A, 9% for Grade B and 7% for Grade C. Across the country, affordable apartments will continue to be the most sought after, particularly apartments in the range of 15 to 18 million dong per square metre. With the recent proposed regulations from the Vietnam Ministry of Construction expanding the right of foreigners to own property, we could see a small renaissance in the mid-end and high-end sectors, but we do not expect this legislation to transform this sector. Here at Cushman Wakefield, we expect 2014 to be a better year for the property market in general. We need the problems in the banking system to be worked through to be a fuller recovery, but the government is working on this. So we're quietly confident that 2014 and 2015 will see something of a renaissance in the Vietnamese economy. From everyone at Cushman Wakefield Vietnam, Chúc mừng năm mới. Happy New Year.